Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Apple report for Tuesday, February 6th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the charts. Start with the big picture, work our way into the day itself. Just a reminder that well, there's a lot to be unpacked here, but I'm not going to get too deeply into it. Long-term buy signal played out last May above the 163.22 to 164.64 band of channel resistance, now support, that we revisited last October. Came off of it nicely. When we did come off of it, 3 to 4 weeks later, we closed above a newly formed descending channel top that is more mid to longer term in scope at 177 and a quarter all week long. We've fallen back to this, into this zone quite a bit for the last month and a half. And most recently was last week when we tested. Where is it? This is probably a decent chart. We came very close to testing it. Let's put it that way. It was a little higher then. This is this week's number. But last Friday, we felt this is not an updated chart, by the way. But I do have updated charts, just so you know. But this is the near miss, once again, of meaningful support on the daily and weekly chart that I'm just going to call the upper 170s. Now, what did occur on Monday was a gap above a descending one-third speed line that is at 185.21. This is our weekly resistance, now support that we've closed above it, and above which, having closed above the descending one-third speed line, we can anticipate 192.41 this week, possibly over the next couple of days, and over the next 2 to 3 weeks, the 195.94 to 197.93 region. So holding above 185.21, I do expect the mid to upper 190s again over the next 2 to 3 weeks. On the way up today, I still have 189.44. I don't have that shown anywhere. We came close to testing that actually on Monday. That is nothing more than a 50% upside retracement from the December high against the more recent low put out last Friday. 189.44 can contain intraday buying, and in fact below which we can ease back to 185.21 today perhaps, where we could bottom out through next week, and above which we should, over the next 2 to 3 weeks, reach into the 195.94 to 197.93 region. So if we slip into the mid 180s here today or the next couple of days, it is a buy opportunity. 3 to 5 day swing traders expecting 192.41, 2 to 3 week swing traders anticipating the mid to upper 190s. Now, if we do close today back below 185.21, that reverses momentum. And so if you were long, if you got long on a Monday above 185.21, I don't care what your time horizon is, whether it's the next 3 to 5 days or the next 2 to 3 weeks. I do think you should exit that long position and consider reaching for, well, expecting rather than going short into the upper 170s. 176.69 is a descending channel top on the daily chart. And of course, on the weekly chart, we have 177 and a quarter. So if we close today back below 185.21 by the end of next week or sooner, I would expect this 176.69 to 177 and a quarter region where we could bottom out. 177.56 is, by the way, do I show it anywhere? I do. A descending channel bottom. Is actually 177.68. This, once again, is not an updated chart. My apologies, but we're not going to see these levels today. They're very close to these, I will say that much, but it is not an updated chart. So let's talk once again downside. I just want to reemphasize that if we break 185.21. What is the intraday target? Under that kind of a scenario, I think 184 and a quarter could be about it, the minor point just below it. And then once again, closing today below 185.21, good high for the week. The next 3 to 5 days, I would expect with this kind of volatility, likely to continue south into the 176.69 to 177.56 region, where a buy opportunity presents. Not only through the rest of February, but possibly through the rest of the year. So this 177 and a quarter area is a solid zone of resistance for those of you who trade not only the 3 to 5 week time frame, but even the 3 to 5 month time frame. Now, I will mention that if you would rather buy on strength rather than weakness, and certainly testing 177 and a quarter over the next week or two would be buying on weakness, you may then await for a settlement above 197.93. I'm talking to you more like 3 to 5 week out to 3 to 5 month position players. 3 to 5 week position players are bottom picking the upper 170s, anticipating the mid to upper 190s. 3 to 5 month position players are buying once again the upper 170s and actually anticipating the possibility of 236.99 as we move into later year. This would be clearly indicated with a settlement above 197.93. I would expect that 236.99 into the third, fourth quarter of this year if we were over the coming 2 to 3 weeks to close above 197.93. Have I said everything? Let me talk the upside just one more time. 189.44, that 50% upside retracement that we nearly tested on Monday. If we push or open today above 189.44, with this kind of volatility that we've seen the last couple of days, we actually could test 192.41 on an intraday basis, where a daily high can be placed. And once again, 192.41, even though I have it labeled as a session containment level, it just might contain buying into later week. And from here, we could fall back into the mid 180s again within 3 to 5 days. Finally, not going to happen today, I don't think, but if we did close above 192.41, we should within 3 to 5 days or so, or sooner than that, push into this significant 195.94 to 197.93 area. I call it significant for near-term traders, 2 to 3 week swing traders. And yes, it is now considered a 2 to 3 week objective following Monday's settlement above 185.21. I think I've said it all. I am going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of our 5-day free trial. You're going to see a lot of good stuff there that you might just want to stick around for. I'll leave it at that for Tuesday's Apple Report. Be back tomorrow, of course, with Wednesdays. And you have a great day.